Hi, I'm Shashank Bhargava, and you're listening to Three Things, the Indian Express news show. The Adani Group is one of the largest corporations not only in India but across the globe, and is led by Gautam Adani, who up until very recently was the world's third richest person. But that changed after an investment firm called the Hindenburg Research made serious allegations against the group. These allegations have led the shares of the Adani Group companies to fall sharply over the past couple of days, costing them billions of dollars.
There is no end in sight for Adani Group's troubles. Shares of Adani companies continued their sharp plunge for the sixth straight session on Thursday.
After Hindenburg Research, which is an activist short-selling firm, made a big call yesterday, publishing a report saying that Adani Group is committing what it called the largest con in corporate history, as we know.
Gautam Adani has denied this, and he says that the report is baseless, but that hasn't, of course, been enough to prevent a sell-off in the market as well. So
this entire saga has dominated global headlines and has also raised concerns in the minds of foreign investors who have been looking to invest in the Indian market. In this episode, we will be talking about this controversy and how it unfolded. And for this, joining us is Udit Misra, who writes on the economy for the paper. Udit, we understand that this entire thing began a few days before Adani's FPO. Now, for those who may not be familiar with it, could you explain what an FPO is?
So, FPO is essentially, as the name suggests, it's follow-on public offer. As many of the listeners might know, there is something called an initial public offer. When a company goes to the stock market to get listed, to seek funds from the public, it is called an initial public offer. But suppose a company has been in existence, and then after some stage, say 5 years, 10 years or whatever, it decides that, it wants to expand its business or, retire some old debt. It can again extend some more shares in the market, sort of engage the general public and say, listen, we are expanding the number of shares we have and you have a chance to buy our shares, and that way we can raise some money. And that is called a follow-on public offer. So that's very simple, a way for companies to sort of raise additional funding for whatever goals they may have, retiring their debt or expanding their business.
Right, and Adani's FPO was scheduled for the 27th of January. And on the 24th of January, the firm Hindenburg Research published a report about the Adani Group. And that is what started this entire controversy. Now, before we talk about their allegations, could you talk a bit about the firm itself?
Yeah. So, essentially Hindenburg Research is an investment firm, and it basically does a check on different companies. It sort of does a forensic accounting, as it were, of different companies across the world and checks whether there are, some dubious companies or not. And on January 24th, they released the report, which was based on their 2-year investigation, as they said. And what, the title of the report was quite remarkable. It said, Adani Group, how the world's third richest man is pulling the largest con in corporate history. Third richest man being Gautam Adani. So their argument was that in their research, they found that the Adani Group had engaged in what they call a brazen stock manipulation and accounting fraud over decades. So it's not just a matter of 1 or 2 years. And they have argued that, many of their listed companies are basically, they have sky high valuations, which are not justified if one was to do a fundamental analysis of their business. That it's overly debt-ridden, that they have used suspicious ways to spike the price of their share stock. And this was very damaging because it just came almost just 3 days before the Adani Group was about to launch the FPO.
And Udit, Hindenburg is described as a short-selling activist. Could you just explain what short-selling is?
Yeah, so Hindenburg is not just into researching companies and then just sort of releasing a report and sitting quietly on it. They have a purpose in doing that. The whole point of looking at dubious companies with very high valuations is for them to short them. Now, shorting a stock basically means that typically think of the normal process that you do in stock market. You buy something, say at 100 rupees, and then you hope that over time it will become 200 rupees. A stock will become 200 rupees. Why? Because you believe in the business, you believe in the economy, and that is called being long on a stock. And you would hope that between 1 year and the 10th year, the stock would have gone from 100 to 200. And at 200, you might sell it and make a lovely profit. But going short, on the other hand, on a stock is the exact reverse. Where you say, when you look at the stock prices, suppose of a particular stock, which is suppose at 200, you do some analysis and you find that actually the real value of this stock, or there is very good reason why this stock price may actually fall to 100 or 50 rupees, right? So if you've got that understanding, then you would then short that stock. How would you short that stock? You would basically sell the share at 200, even though you don't have it at that time immediately, and you will buy it at a lower price, at say 50.
And by doing this, you are essentially betting that the stock of the company will fall down.
Exactly. So you're saying that once the information comes out, or you in general believe that, something is about to happen that will bring down the stock prices, you say that, it is going to go to 50. So I can sell it at 200 and you can square off that whole thing. You can sell it at 200 by telling your brokers or whoever that I want to sell so many stocks of this company at 200. And by the end of the day, or by the end of whatever settlement period, when the price falls to 50, you buy those stocks at lower prices and give it back to the broker. So basically, you're not holding on to stock or to the shares of that company. You're basically selling it at higher price, knowing fully well that you've released some information or some information is about to come out, which will actually lead to the stock falling to 50. Then you buy it at cheap, and the difference of 150 rupees on every stock is your profit.
And is that what Hindenburg has done with Adani as well?
Exactly. So Hindenburg has done exactly that. And this is a legitimate activity in the stock market. And Hindenburg has done this to many other big companies in the past. And those companies have suffered because they found in their research that there was something fundamentally wrong in the way these companies were getting valued.
Okay, so Hindenburg makes these very serious allegations against the Adani Group on the 24th of January. What happened after that? To what extent did it affect Adani's stock?
So as soon as the Hindenburg report came across, it led to very predictably a fall in the stock prices of Adani's listed companies, because Hindenburg had given very detailed information of which companies were how overvalued and how their share prices had moved. So I'll just give you two examples, say Adani Enterprises, which is maybe the sort of the holding company, the benchmark company for Adani. And it was, suppose, valued at something like 3,855 rupees, January 9th, this start of the year. And on January 24th, it sort of fell slightly to 3,442. Then as the days progressed, before on January 27th, when the FPO opened, it fell again sharply to 2,761 rupees. And since then, it has fallen further to 1,586. So just between, say, something like January 23rd to now, the price of Adani Enterprises, the stock price, has come down from something like 3,500 to 1,500. So that's quite a steep fall. And similarly, if we look at, say, another company, which is Adani Total Gas, which was around, say, 3,900, almost 4,000 rupees level just before the Hindenburg report came out. Then on January 24th, it fell slightly to 3,890 rupees. And since then, the slide has been even spectacular. And now it's at 1,600 thereabout. So again, losing from almost around 4,000 to 1,600 level. So quite sharp falls in Adani companies since then.
Okay, so the Adani Group's stock clearly gets affected by these allegations. How does the Adani Group respond to them?
Yeah, so I mean, there was a statement by the Adani Group saying that the timing of the report's publication clearly betrays a brazen, malafide intention to undermine the Adani Group's reputation.
The report is a malicious combination of selective misinformation, stale, baseless and discredited allegations that have been tested and rejected by India's highest courts. The timing of the report's publication clearly betrays a brazen, malafide intention to undermine Adani Group's reputation with the principal objective of damaging the upcoming follow-on public offering from Adani Enterprise, the biggest FPO by a private sector company in India.
So the Adani Group was very clear that the Hindenburg Research really did not have any legs to stand on.
And after that, did we hear anything from the Hindenburg Group?
Yeah, in their reply, Hindenburg Research said that, and I quote, fraud cannot be obfuscated by nationalism or a bloated response that ignores every key allegations that we raised. So they were very clear about the fact that they had found something genuinely incorrect in the way Adani companies were being valued on the stock market.
Okay, and by the 31st of Jan, the FPO was fully subscribed. But then something happened that really raised everyone's eyebrows. Could you talk about what happened then?
So yeah, I mean, the FPO, it was not very clear how the FPO would get subscribed, but eventually it did. And a lot of big investors came to the party and sort of subscribed the FPO. But then on February 1st, the Adani Group made this rather surprising decision to call off the FPO. And they said that, they will not go ahead with using that money. In fact, they will return it back to the investors because investor confidence is their top priority. And there had been significant volatility in the stock market for their stocks. And hence, they didn't want the investors to suffer.
After a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. The interest of my investor is paramount and everything is secondary.
And Udit, at this time when serious allegations are being made against one of India's biggest companies and one of the top performing groups in the stock market, have we heard anything from the regulatory authorities in India?
Yeah, so ever since the story broke, there were all kinds of demands that, there should be probe on what the Hindenburg Research is alleging. And there are two broader demands. One was obviously a probe into the Adani Group and its functioning, the valuation of its stock prices. And that perhaps is demanded from the Securities and Exchange Board of India, SEBI, which is the market regulator. And the other demand was about the exposure of Indian banks, in particular the Indian public sector banks, to the Adani Group, and similarly with LIC, its exposure to the Adani Group. Considering that the stock prices of Adani Group all the listed companies were sort of falling, they were sinking on the stock market every passing day. So those were the two broad demands that different people, especially the opposition parties, had to the whole episode.
And during this time, we also saw both SEBI and RBI make statements. What stood out to you about them?
So, on February 3rd, RBI released a statement on the health of the Indian banking sector. And the RBI said that there have been media reports expressing concern about the exposure of Indian banks to a business conglomerate. They did not mention Adani in the press statement. And they said that as a regulator and supervisor, the RBI maintains a constant vigil on the banking sector, and on individual banks with a view to maintain financial stability. And as per RBI's current assessment, the banking sector remains resilient and stable. So without mentioning Adani per se, the RBI on February 3rd said that the Indian banking system is resilient and stable. And on February 4th, SEBI, which is the Securities and Exchange Board of India, that released a statement, again, without naming Adani. It said that it was a statement on market stability. And it said that the Indian financial market, as represented by Sensex and Nifty, has demonstrated ongoing stability and is continuing to function in a transparent, fair, and efficient manner. And it said that, SEBI is committed to ensuring market integrity and to ensuring that the markets continue to have appropriate structural strength to function in an uninterrupted, transparent, and efficient manner, as has been the case so far. So both the market regulator and the banking regulator essentially made statements on 3rd and 4th, assuring the public that nothing is wrong as of now. And although they did not mention Adani's name per se in either of the statements.
And Udit, when stock manipulation allegations are being made against a company, what is the role of SEBI in that scenario?
Yeah, so SEBI's role is that it is the market regulator. And by that, we mean that the SEBI has to look at how different companies or all the companies in the market, are they following prudential norms? Are they following the right practices? It has to ensure that, as has been alleged by Hindenburg, no company starts manipulating its stock. I mean, one of the arguments that has been made is that the shell companies have been used to spike up Adani stock prices. That's the allegation that Hindenburg has made. And so typically one would presume that, if there's prima facie any evidence, then SEBI would have to look into such a matter and figure out whether such a thing is happening or not, one way or the other.
And Udit, at a time when India is looking to get foreign investors to put money into the Indian economy, to what extent does this controversy affect that?
Yeah, so, it has come at a very key point for India's markets also and India's growth story. India's growth story and growth rates are higher than the rest of the world. India is the fastest growing major economy. And this is a great time for it to sort of attract foreign capital. But data would show that even before the January 24th report, 2023 has seen a lot of foreign investors pull out their money from India. And especially after the Hindenburg Research report, it is a massive dent on, or a question mark on, the credibility of many of the big companies, because Adani being such a massive company, such a big leader, question marks on Adani are now making a lot of international investors wonder what is happening, whether prudential norms are being followed or not. And so this is significant because India is a capital scarce country. We have surplus labor, but we do not have as much money, as much capital. And we need international capital, we need foreign funding to grow. It would help aid our growth process. So yeah, it's a significant moment in India's history in that sense.
And Udit, the other thing that I was curious about was that, Hindenburg is a small firm, though agreed that it does have a reputation. But how is it that allegations by just this one company has led the stock of the Adani Group to plummet so much?
Yeah, so part of the thing is that even though the Hindenburg Research is a small firm, it is known to have brought down many giant companies by similar research, by shorting their stocks. There was one story in 2022 where Nikola, which is a big auto company, was brought down in a similar manner. They have a long list of such research where they have actually shorted very significantly big companies and managed to successfully shorted their stocks. And those companies' valuations fell. So first of all, a track record with Hindenburg, even though it's a small firm. But you have to understand they're not making anything, they're doing research. So they don't have to have a manufacturing plant per se. And the other thing to notice here is that the fall in Adani stocks is gathering momentum with increasingly people on the face of it buying into what Hindenburg Research has alleged. For example, when a Citigroup or a Credit Suisse have announced that they will not any longer take Adani bonds as collateral, that's a very significant move because, bonds of any company or any country are the most safest assets, the safest ways one could raise money. So if the big international banks are not willing to take Adani's bonds as collateral, then that's a significant cue for everybody else in the system.
Right, because a lot of people obviously don't know the intricacies of a company. They probably don't even know all the allegations, but they're taking cues from these big players.
Yeah, so that's the problem. The panic itself can make it worse for Adani and for related companies or banks. The other problem is that, for the Adani Group itself, it's a group which has obviously had a very sharp rise, in the last 2-3 years. The valuations have gone up. They've acquired new companies. And one of the ways they have done that is that they have put their existing stock valuations as collateral to lending institutions.
Also, they have borrowed money from banks by saying that, look, we are good for the money because the value of our stocks is so high.
Exactly. So, the stock prices have gone up. They've gone to banks saying that, listen, we are pledging a certain amount of our 10% of our stake in this company. These are the stock prices. They are so lovely right now. They're so high. You can give us a fraction of this, whatever fraction of this to us as loan. Now, but over time, if the stock prices keep falling, then the value of the underlying asset, which is the stock, keeps falling. The bank will get worried, or the lending institutions will get worried, both India and outside, of where is this going? I gave you, say, X dollars of loan, thinking that the collateral that I had, your stocks, were worth 2X. So I was covered. But now I find that your stocks are not worth 2X. They have fallen to, say, 0.5X. And I have given you a loan of X. So I am now not covered. So that kind of worry and panic sets in once big bankers stop taking your bonds as collateral. And there is, in general, a sentiment that, there might be prima facie some reasons to worry based on what Hindenburg Research has alleged. And that not only sets in the company in a negative manner for future trading sessions, but also raises the costs for the company to raise money. Typically, the safer the company, the easier it is for them to secure loans. The funny thing is that a poor man is charged a higher interest rate than a rich man, because the bank or the lending institution always knows that the rich man will always be able to perhaps pay back and the poor man may falter. So that is why. So now if there is doubt in the paying capacity or the essential business, then there can be all these worries of how would they raise funds. And that then triggers a worry about the fact that Adani Group has been growing very fast, quite remarkably. It requires steady, infusion of capital for expansion, for retiring old debt. So there is a worry now about, how would you continue your future expansion and growth? While this has to be said that, Adani Group has very clearly said that it does not affect their expansion plans or their current or future growth plans, and they are completely on safe territory. But those are the worries that are dominating the market. That is what is triggering or continuing to bring down the stock prices.
You were listening to 3 Things by the Indian Express. Today's show was written and produced by me, Shashank Bhargava, and was edited and mixed by Suresh Pawar. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it. Share it with a friend or someone in your family. It's the best way for people to get to know about us. You can tweet us at Express Podcasts and write to us at podcasts@indianexpress.com.